Well, it is potentially day two of Nvidia stock coming down. That's pretty wild. Now, from the intraday top that we've seen, if we hold on to this about 1.6 level, we're potentially looking at a total of about 10% from top to bottom that we've seen here on Nvidia so far, which is not fantastic, but it is something. Oh, let's change that mic there. It looks like there we go. There we go. Volume should be fixed. Thank you so much for pointing that out. It's interesting. Usually that defaults, but last couple days in a row that hasn't been defaulting to where it's supposed to go. But anyway, 2 days in a row now of Nvidia red. If Nvidia holds on to this 1.6, we would have gone from this high yesterday of 140.75, 140.75. Down now to 128.61. That is a difference of it's about 9.7%, 8.7% rather. Let's get that right. So let's see how the day goes, but it's somewhat of a bad omen for the potential of a blow off the top on Nvidia. Not ideal. We've also got some negativity spreading across the rest of the, frankly, just risk asset sector, which is unsurprising. I mean, Palantir down 3% as well, ARMS down 2.6%, Coinbase, also not a surprise, down 2.4%. It's not as surprising that if Nvidia goes, you're probably going to see everything go. So I'm not highly enthusiastic about the potential for Nvidia falling, because I think if Nvidia falls, you're just going to have a market, at the very least, probably a market correction, if not some form of larger oopsie-doopsies. Mostly because I think Nvidia is somewhat the toothpick that's holding up the market right now. I don't think we have some larger fundamental woes right now that are suggesting the market should sell off. But the only thing that I do look at is this potential that you have a sort of a technical sell-off is more what I would look at it as. So I wouldn't necessarily look at this as a fundamental sell-off rather than a technical sell-off in the short term here. So I don't know. I mean, who knows? Maybe this just has to do with triple witching, which happens today. Options expiration, blah, blah, blah. So we'll see, but it's something definitely paying attention to. As far as what's to the upside, well, you've got short Bitcoin ETF. Who's been talking about that? Oh, if only somebody has been talking about short Bitcoin ETF. DJT is actually up 1.5, although yesterday it was down 14%, so it's kind of just like, a post-sell-off bounce. And Robinhood, back under $22, up 55 basis points, with Embraer up about 38 basis points at 26.76. That's been a good mover, that stock. It's the little stock that could, I suppose. Anyway, all right, so let's see what we have today. We've got a message here from Nick T. On the good old budget deficit. Now, this is one that I thought was interesting, mostly because I feel like at this point it's sort of old news that our government's budget is just pooped, not great, not in a great place, and just feels like, unfortunately, getting worse. And let me share Nick T's latest here. And, okay, looks like I have to press a few buttons here before I can get there. That's all right. There we go. All right. We got a few actual Nick T posts here. Okay. First one is the following. The Congressional Budget Office estimates that the U.S. budget deficit will be around $400 billion larger this year. Just a small additional $400 billion. Don't mind the country being more in the hole. It's like Gavin Newsom's California. Oh, if only somebody would have warned that Gavin Newsom would drive us into substantial budget deficits. Oh, Maybe somebody could have ran for governor against him and told everyone that. Anyway, that'll put us at 6.9% of GDP versus the 5.6%, which was the level where we were in February. The increases are largely due to increased spending. Contributors include student aid, that's student loan forgiveness, as well as the good old foreign aid spending. That's going to be good old Iron Dome rockets, baby. Somebody's got to pay for them. So, oopsies. Oh well. So, in addition to that, and another thing from Nick T here, CBO on immigration. Effects on the federal deficits. On net, the surge in migration that began after the pandemic could increase revenues by 1.2 trillion and outlays by 300 billion over the next decade, actually lowering the deficit by $900 billion. Now that I thought was very interesting. This is also not uncommon, though. Generally, when you have more people in a country, you have, well, obviously you're always going to have concerns over crime or support services, concentration of poverty, whatever. There are many things that go on with immigration. But beyond that, when you have more people in an area, you have more of the velocity of money moving. So the reality is you might actually generate more money when you have more people, which makes total sense. It's one more person going to get a meal at the hot dog stand, which means a little bit more money the hot dog stand vendor can use to go reinvest in their business or pay payrolls. And then that money gets spent, and the cycle goes on and on and on. And so you have the multiplier effect of spending, usually, which is somewhere between 4 to 5x. Government spending is considered to have a pretty large multiplier, so you have to give them credit for that as well. Usually somewhere around 10x. It's probably because they're so extremely wasteful with their spending. And then savings and stock investing has really the lowest multiplier, really often sitting somewhere around 2. So kind of on the boring side. But that's okay. So anyway, so with that, let's take a look at what else we got. So let's see here. Let's see what the Wall Street Journal has for us today and what the CNBC has for us today. All right. $2 billion Baltimore bridge rebuild is a test case for debate over infrastructure spending. Yeah, well, kind of got to put the bridge back together. Supreme Court rejects challenge to tax on foreign investments. Okay, blah, blah, blah. Let's see. CarMax posts 33% drop in first quarter profits. So now that is interesting. I'm going to go pull up the earnings for CarMax. So used car prices are falling. That shouldn't be a substantial surprise. And even though they posted what appear to be not great results, the stock's actually up 36 basis points. So let's see if we can get some details on this. But used cars falling, or frankly going negative, will actually be a pretty positive contributor to disinflation, because frankly, you're just going to have deflation in cars. And as you have deflation in cars, eventually you will have a nice drag on CPI inflation reads, which is a fantastic thing. That's what we want. You really want inflation to come in negative. You want sort of some level of deflation on some month-over-month periods, just to sort of wake the Fed up to start cutting, because you don't want to go into a deflationary spiral. But mostly because that turns into market depression. But anyway, so let's see what CarMax has. So if I go to KMX, I really would have never guessed that was their ticker symbol. Anything but KMX. Anyway, Q1 EPS comes in at 97 cents. Oh, okay, so really their numbers came in at expectations. So they were expecting to have these sales plummet this much. EPS for Q1 came in at 97 cents versus 1.44 a year ago. Yeah, I guess you had a slowdown since last year, but not necessarily much worse than expected. CarMax bought 14% fewer pre-owned vehicles via trade-in during the quarter. Owners are holding onto vehicles longer or demanding margin-eroding payouts. Used volume slipped. Profit per vehicle was virtually flat. And they think the downside pressure of car prices is somewhat lessening. However, average retail prices for used cars have fallen from a high above $29,300 to below $26,000. So I think there's probably a lot more room in that decline there than even what we're seeing now. All right, interesting, CarMax. Very good. All right, so then we have Biden is spending big in states Democrats haven't won since 2008. Obama. Those were recession days. I remember 08. Nvidia's success is the stock market's problem. Yeah. Let's see what the Wall Street Journal has to say about that. It was the best of the times, it was not the worst, but some pretty bad times. In the tale of two stock markets facing U.S. investors, the S&P is soaring to new records driven by a single company, Nvidia, while less important companies fall and remain far below their highs. The Russell 2000 index of smaller companies is down 17% from November 2021 and has made no progress at all this year. In the S&P 500, which includes the biggest companies, the average stock is about where it was at the start of 2022, and more than half of the current constituents are down since then. Worse, only 198 have managed gains this month as the index reached new intraday highs on 11 out of 13 trading days. This narrowing of the market is prompting concern among technical analysts who think broad gains by a lot of stocks called breadth make a bull market more sustainable. Yeah, in other words, the bull market's much less sustainable now because it's all just driven by Nvidia. So usually you could go over to the greed and fear index. Oh yeah, okay. This indicates we're in fear. It's probably because of breadth, because momentum is up. Stock price strength is in extreme fear. That's not great. And there's breadth. Look at that. This is the lowest level of breadth that we've had since November of 2023. Maybe I could tell them something. You know, people call me meat breath. Then you've got puts and calls, still greed level here. A lot of these items actually in fear, the exception of momentum. Really interesting. So, all right. Yeah, very interesting. So, by the way, today is the event in Vegas, which will be really fun. That's going to be the start of a 3-day sort of finance and real estate and calling it the Millionaire Symposium event. So that'll be really fun. What's also really cool is Ben Malla's coming out. You got Kathy Wood coming out. It's going to be a good time. Lot of learning. So, yeah, that's kind of cool. It starts today. All right, let's listen in here. What do we got? Baby boomer retirements leading to labor shortages.
Fortune 500 firms in the U.S. have been saying, look, we can't find qualified workers for these jobs that are necessarily dirty or uncomfortable. You have to deal with the public, or there's no flexibility in terms of hybrid work.
Veronica, when it comes to immigration, how do you view it as basically putting a cap on inflation? Have we reached the point where pretty much that story is over and starting to normalize?
Yeah, I mean, I definitely think, it's been helping to loosen the supply side of the labor market, of course, more workers. So it is helpful for inflation on that front. But immigration is a boost to both supply and demand. I mean, those are people who are going to, buy goods and need housing. So it's not so clear what that does to inflation. It is probably overall a disinflationary force, but not necessarily a big one.
Let's dig into this. And I'm glad that, Emory, that you brought up the Mark Giannone report from Barclays. Barclays. He was talking about how, honestly, it's counted for about 3/4 of all job creation so far in recent years, the immigration flows. To me, this is sort of shocking. And I'd love both of your takes. Veronica, I want to start with you. This idea of, is this the right kind of job creation that's going to really create a sustainably and stronger economy versus filling in gaps and doing it on the cheap in a way that maybe makes people understand why, even though we have a good labor market on the surface, people seem so dissatisfied?
Yeah, I mean, I don't think the immigration story is necessarily one that's going to last with the strength that we've experienced the last couple of years. I don't think we're going to have such strong immigration maybe 5 years from now. And it's not so clear, that these workers have been hired at lower wages. We still see average hourly earnings something like 4% year on year. So there hasn't been this big disinflation in wages. But yeah, it is probably, partly adding to that.
Well, but this also, Dana, something we were talking about with Mark Giannone of Barclays, this idea of how much can we really understand the numbers that we're seeing for the labor market as being strong if they are very different than what they've been in the past. If the jobs being added are new people coming to the country and don't account for job mobility, also don't account for how much this economy has grown and how many more people are in the labor force when you start to talk about just absolute numbers. How much is the view that we have of the labor market overly rosy based on just historical comps that are no longer valid?
Well, laborers are laborers. It doesn't matter if they're foreign born or they're domestically born. The point is that we don't have enough people in the labor market right now. Look at the labor force participation rate overall. It has not returned to the pre-pandemic level. Why is that? Well, if you break it out, looking at people who are prime age, 16 to 64, yes, that participation rate has recovered, but people 65 and older has not. There are people exiting the labor market. So immigration certainly is going to be, continues to be, and will be an important solution to addressing the fact that we're losing workers hand over foot to retirement, but it's also getting those domestic workers out. And certainly when you look at the wages, the wage gains that we're seeing, they're in goods. So those are the types of jobs where many people who are immigrants might gravitate to, and those wages are still rising very aggressively. And even among services, wages growth has slowed, but it's still particularly elevated relative to the range.
Sort of an interesting idea, the thought of immigration sort of offsetting retirements. You definitely don't want to run out of workers in an economy, but I know there's a pretty big political movement for anti-immigration right now. There's a lot of frustration. I think part of that has to do with policing and the difference between legal immigration and illegal immigration.
When we're talking about this world of trying to bring inflation down, waiting to see if there are cracks in the labor market, isn't waiting for Godot. Do we need to get used to something a little bit more uncomfortable because there are still persistent supply issues?
Well, really, when I look at the drivers of inflation, it's certainly labor supply, and that's beating up wages, and that's flowing through to services, excluding housing, and certainly excluding.
This is the argument that immigration can lower inflation because you lower pressure. So a quick note: today we are going to be getting manufacturing and services PMIs. We're expecting those to come out at 6:45 though, California time. So that's in about an hour. We actually didn't have any kind of catalyst or anything in the last 15 minutes. So I know folks are always kind of wondering about that. So yeah, note there. What about the expenses on taxes to immigrants? Yeah, so, well, the CBO just estimated that, and we actually just talked about that. It says here, on net, the surge in migration that began after the pandemic could increase revenues by 1.2 trillion and outlays by 600 billion over the next decade. This is all over the next decade. Lowering deficits by $900 billion over the decade. So, it's an interesting estimate. So if I were to, let's see, if I were to write that down, I would say over the next decade, the CBO estimates that immigration could lead to revenues of, let's see here, revenues of 1.2 trillion, I think it was. Yeah, 1.2 trillion of revenues. less 300 billion of spending, reducing the deficit by 900 billion over the next 10 years. There we go. Yeah. Well, that's I mean, obviously it's a government estimate, but it from a velocity of money point of view, it totally makes sense that more people on net are actually going to contribute to GDP. Okay. Kevin, how will VIP work at the event today? Well, you'll find out when you get there. Now just show up at 4, and then you'll get taken care of, and you get taken care of. You get your insight. I emailed staff with some questions a week ago. How long does it usually take? Staff is empty. Like last night, I was working with the team, and we were done. We caught up on all the emails. So if you didn't get a reply, something went poopy doopy. You either went to spam or what, and you should resend your email. And I have a sound for you. Hold on. Oh, how do I do that? Uh-oh. Hold on.
Poopy doopy.
Yeah. They pay sales taxes too? Well, yeah, that's true. Let's see here. Everyone complains about migrants, but nobody will do the farm jobs. Nobody complains when they serve you at a restaurant. If you're legal, New York will give you free cash. Also, immigration increases housing pressure. It doesn't help lower rent. Yeah. I don't know how to say this like nicely, but in populations are going to concentrate around where jobs are. Jobs are around the largest metropolitan areas in the country. That's where immigration is going to concentrate, that's where jobs will concentrate, and that's where you will continue to have a lack of building. And therefore, you're probably going to have a continuous lack of affordability in those areas for when it comes to rent. So if you're really hoping and praying that rents are going to go down, I mean, maybe you'll get some adjustments through like recessions or like post-COVID now, but the long run trajectory, I don't think rents are going down anytime soon. And they ain't gonna build enough. So I think you're hoping for the wrong thing. Yeah, I saw this about like, I don't know, some like blonde chick, I guess, that's trending on the internet. So thank you for using the phrase apparently that she used. How many millions of people need to cross the border for you not to shirk it off? I didn't say I shirked it off. I think immigration's a big problem. Elon is buying... okay, something bigly. IdeaPad. Will businesses be in trouble for hiring illegal aliens and paying them cash? Well, that's what some people say should be done, but you know, I don't think that there's really a way to pull that off right now. Palantir drops 3.1% after Moneth Crispe cuts it to sell. Well, I wonder why. Oh, valuation concern. Analyst Brian White says the downgrade comes after a dismal earnings season for enterprise software failed to live up to 18-month Gen AI propaganda cycle. The market will increasingly shun software stocks with excessive valuations. Okay, well, let me find out if I agree that the valuation is high. Actually, I think they might be right. I don't think Palantir is necessarily a cheapy deepy. I will find out. Palantir, yeah. Alright, so 20, what are we at now? 22 or something like that? Divided by 33 cents. Yeah, you're trading for 66x. Yeah, you're at about a 3 peg. A 3 forward peg. Kevin, you should really specify what talking about. I did. I don't think you were paying attention. Maybe you loaded in late. I mention it every time. TMT Mike. So you're trading with 70K, but then you made 90. Yeah, that's right. So that means I made 90 on top of 70. So the account grew by 90. Yeah. TMT Mike is talking about my trading P&L yesterday. And see, I have this thing where I think it's really important to trade with money that you're like really comfortable with potentially losing. So I'm very nervous about trading with like I hate trading with like a 200K position. So I like 50K to 90K positions at a time. And I don't know, this just seems to be the sweet spot for me. So yes, this is a realized P&L on top of that. So that means, yeah, that more than doubled yesterday on trades, which is great. I mean, not every day is like that. The good news is the account, this is like, what is this? The account's almost back to its all-time highs for 2024, which is really cool. I have this screenshot. This is just a quick example of it. But I had a rough start to June. You could see a little rough start to June there. And I'm almost back to the all-time highs, which is really cool. But we talked about that period. In fact, I was pouring tequila into a SpongeBob mug. But no, and anybody who's in the Stocks and Psych group, they know it's like, okay, here are the P&Ls, 1 month, 3 month, a year. I try to post them every single day as well. So if I lose money, I post it. If I make money, I post it. And yeah, it's overall. I mean, it's what you would expect in trading. It's not always straight up, but it's doing really well right now. So. Okay, so speaking of trading, I wonder how many shorts they're going to be going today on AI. I'm really curious about that. So that'll be interesting. Okay, what are your thoughts on NIMBYs? It's not in my backyard, and that's basically a way of saying local residents who try to influence local politics to limit building. Yeah, you're not going to change that. You're not going to change NIMBYism because the concerns to some extent are legitimate. People who own real estate, A, don't want their real estate devalued, and B, don't want more traffic, and C, don't want the noise of construction. So, I'm not saying that's right because you need more housing, but I also acknowledge that, they have real arguments. So yeah, you're not gonna do that. Yeah. How could I? No, rewind the tape. I literally talked about illegal immigration, and I said that illegal immigration is a problem, and that the immigration system as a whole is a problem. You need immigration reform. When people argue about semantics, that's such bullshit. Listen, I'm an immigrant. Get over it. We need more positive legal immigration, people coming to America with skills. If I want to hire somebody from Bulgaria and give them a place to live and a job, I should be able to do that and bring in, people who can function in the society and support them as an employer. The immigration system is horribly broken. Terribly broken. Was it Jack Daniels? Oh, it was Jack Daniels. See, I kind of forgot that day. Yeah. Ryan, there was a screenshot. It was literally in the video. It talked about how much of a loss there was. The chart was right there in front of you. You just had to do the math. So let's see here. How can we save some money on taxes last year with the gain from this options trading this year? Well, yeah. There are a lot of things you can do. Some people, it depends on how you want to set up your sort of trading. But some people look at their longs and they look for a tax loss harvest on their longs in their core portfolio. Some people look at you know, maybe what expenses they can write off as a thanks for you know trading basically. So like people write off their news subscriptions, their computers, their internet, their home office, internet on their vacations for when they're trading, their cell phone bill. You know, some people will set up an LLC to do that. I don't know that that's entirely necessary because you could do that as a sole prop as well. I'm pretty sure that I'd have to double check. I don't know about that. I'd have to double check that. Yeah, well, because I guess trading, if it's not in an LLC, isn't going to go through sort of a sole proprietor income. It'd be more of an investment income. That's interesting. Yeah, I guess that's probably why some people use an LLC, just to sort of write off some things. But yeah, there's always, you know, there's so many tax loss harvest opportunities too, and generally a diversified portfolio, there's generally always something that's red. You know, if you have like exposure to 20 or 30 stocks, there's generally always something you can loss harvest in there. So, let's see here. Yeah, actually, so the last few days have been really interesting because we've been using this, it's really simple, but it's basically like in Webull, this manual trailing stop loss on options, and it's really, really great because you could use it for take profit and then also just a rising stop loss when you're winning on a trend. And it's so great for minimizing the volatility on options. It's really, really great. But yeah, Webull doesn't let you do trailing stops yet on options, which is annoying. So another boring market day. I don't know if that's necessarily true, given the potential move here in Nvidia down almost 2%. I think that's going to be very, very interesting. I'm a bull that's being forced to short. Oh. Could always trade in a Roth. Well, I mean that depends on how much you've got. You know, you're trading with. So I actually am live on YouTube. I'm live on the Meet Kevin Market Live channel. Meet Kevin Market Live. We just moved the lives over there. Yeah. Yep. Yeah, puts all day. Fire, yeah. It's going to be interesting. Are we still at the 6.5 on the bull scale? You know, I talked about this in a video yesterday. So, you know, I was reading this jobs paper, and yeah, I'm still in like the 6.5, maybe like 6.8 to 7 range. So I'm still not like, you know, in the mega bull range. I still feel like I'm like a grade C bull, maybe even grade D. So I'm not like, I'm slightly more bullish than I am bearish is the way I put it. But, you know, based on just technicals, what's happening in the market the last 2 days, mostly specifically with Nvidia, there could be a short-term sell-off, a technical sell-off in the market if Nvidia continues to perform poorly. And unfortunately, I think that's going to take the entire market with it. Nvidia is the only thing propping up the market right now. In terms of loss harvesting, don't you lose more overall to taxes if, for example, you trade Tesla for a loss and then trade it again for a gain? Well, I mean, what you're referring to is like a wash sale. So, like, let's just say, for example, you have a Tesla position that was $200,000 and now it's $100,000. Like, and it's stuck at 100K, right? So it's down 50%. Like, that money's already lost, right? Like, at this moment in time, I know people are like, you haven't lost anything if you didn't sell. The value's gone. So the rest is just delusion and you know, trying to like delude oneself. The money's gone. So the play would be, can you find a 30-day period of time where Tesla's relatively low catalyst and then sell it for 30 days and then rebuy it, say, after 31 days. And then you have, ideally the same position, if that's what you want. And so now you're back in 100K, but now you're basically able to tell the IRS, hey, I lost 100K here. Well, now you could go make 100K. Obviously, talk to a CPA. There are differences between, short-term capital gains, long-term capital gains, and the way they offset each other. And you don't want to mess up the wash sale rule. There are a lot of things that go into taxes in the IRS, so talk to your CPA. None of this is personalized advice, but that's a strategy that people will use because, then you can go make lots of money and potentially not pay any taxes on it. And if you can get in and out at the same price, and you took a loss harvest benefit, well, then you just won the game. That's hard, though, because usually there are catalysts coming up. Like with Tesla, you've got delivery numbers for Q2 coming up, and those are coming up soon, within the next 12-ish days here. So you might have to, and then after that, you'll have earnings. So you probably, and then after that, you get the robotaxi event. Yeah, so you're full of Tesla catalysts here. Tesla earnings date. Let me see what Q3 is. Sorry, that'd actually be Q2 earnings. July 17th. Yeah, and then on 8/8, you've got Robotaxi Day, which is 2 days before Lauren's birthday. Yeah. Nah, he's 6'9". Yeah. Why not hire AI assistants instead of immigrants? You don't have any employees, do you? So, for the software engineering intern, honestly, we're probably looking at this point for experienced folks across the board. So, we need experienced like Series 7 traders. We need experienced folks in legal, experienced folks in bookkeeping and accounting, and experienced software devs. And we'll pay based on that experience. We think well. So if that interests you, send us an email at jobs@meetkevin.com. We were able to hire interns really 2 years, a year and a half or so ago, because we had a lot of time and I could train the team exactly what we were looking for. But now things are about to really take off within the next 6 months. Not only for House Hack, but for the BD as well. So we've got a lot of work to do, so to speak. Now, so let's see here. The CEO of Dell retweeted Michael Saylor on a post he made saying, "Scarcity creates value. Dell may be buying Bitcoin soon." Dell will do anything to meme up their stock, and they've been doing well so far. Yeah. One day you'll need a welder. Hell yeah. Oh yeah, sorry, yeah. And to be clear, we really aren't doing remote for any of these positions at this point. Yeah. Did you see Trump's position on immigration yesterday during the all-in? It sounded like positive common sense position take. Nope, didn't see it. Tell me about it, and I'm happy to comment on it. Someone here thinks Tesla is vaporware. Well. All right. Can I relocate? Of course. Yeah, jobs@meetkevin.com. We didn't even consider relocation money. It's totally happy. I mean, and people are like, "Oh, you get a job posting or whatever." This was it. Anyway, so okay, all right, very well. So, what else here? Okay. So we saw the Nick T stuff. We are Let's see what else here. Construction jobs. Housing market received disappointing news Thursday after government data showed the building of new homes fell across the board in May. Yeah, I mean, in May you had higher rates too. Rates have come down a little bit now. And that number fluctuates pretty heavily. But yeah, I mean, we were reading some of the home builder sentiment reports, and you can definitely see there's not abject fear, but there's certainly awareness of being a little bit more careful with, wanting to start a bunch of new projects. So, yeah. Okay, what is this? This Wall Street Journal article on NVIDIA is basically trying to suggest that there may be a little oopsie doopsies coming for NVIDIA, and that's what's holding up the market right now. I mean, that's kind of what everybody thinks. But then again, it's been said for, a while now, and NVIDIA has continued to go up. Yeah. All right. Well, we'll see. Right now, it's down 2.5%. Supermicro's coming down to... How about AMD? AMD was a killer yesterday. That was a great stock to play yesterday. There's so much momentum in that puppy. Great. It's fantastic. All right, let's listen to Doomer for a moment.
But really just staying invested here, not being shaken out of the market, especially as we start to, in the third quarter, approach the election season, which could inject its own dose of volatility, really just focusing on the underlying fundamentals, which between earnings growth, which look to be accelerating, between stable underlying economics, we think there's a lot of reason to be optimistic here still, despite the run-up that we've had in tech.
Trump said he would give a green card to all foreigners who graduate from a college in the U.S., including two-year junior college. Smart. I think that's great. I'm all for, to some criteria, like people who are either capable of working or graduating college, which, I know those are debatable as to whether those are the same answers. Yeah, I don't think that's bad. I think streamlining the legal immigration system is very important. Payment process. I was supposed to get the stocks course on the last day of the coupon sale, however, did not work. Payment processor error. So what I would do is, if you want, a coupon code debate is up right now. The net price is higher. The net price goes up over time. But just email us at staff@meetkevin.com, like some kind of email or whatever, like forward something going like, hey, tried to check out last week. Here's some kind of evidence that I did. Whatever you have. And I'm sure we can make that adjustment for you. Do you do the job interviews personally? Not the initial, 3. Eventually, I get involved. Yeah. Staple green cards to diplomas. Yeah. Good way to put it. Somebody says, I overwork during remote work. I get paranoid that I'm not doing enough and I do more than normal. Yeah, look, I'm not saying that remote work is bad. It's just not for us at this point. We're still too small. We're too small for it. So here.
You're wrong.
Yeah. We got lots to choose from here. Like I even got this one for when we do Fed Day.
Data dependent.
And then when we listen to Larry Kudlow.
V-shaped recovery.
Yeah. Can you sponsor a trader in order to take a Series 7? No, we really are looking for somebody with actual experience with FINRA at this point. Ideally somebody who actually is in the industry. Obviously willing to pay for that, but we need somebody in the industry that is at the bare minimum a Series 27, if not like even a 24. So, you know. Okay. Yeah, Christopher, watch lecture 1.0, and that'll get you set up. Okay, Apple AI rally puts valuation at risk of outpacing reality. The stock barely moved, I feel like. Apple's record break. I mean, its valuation is a little on the higher side. I know it's just like a 3-peg. But I thought it was going to move a lot more, and it just didn't. Elon Musk is helping take population collapse mainstream. Yeah, I walked in to where all the kids were yesterday, and there were, including me, like 12 people in the room. Just because you have 7 children, and then you know everyone else. It was kind of crazy, but it's also kind of cool. It's like these little babies are freaking awesome. And Summer's doing really well, which is also really cool. Amex buys software to help with hard-to-get dinner reservations. What? Amex agreed to acquire Talk for $400 million from Squarespace, adding a service that could help customers book dining and other hard-to-get reservations at exclusive venues. See, Amex is always, they're smart. They're always trying to appeal to those higher net worth individuals. And, you know, the credit standards are also, I think, some of the highest in the industry. Next to, I think, JP Morgan, they are really tight on credit cards. I remember when I was, 18, it took forever to qualify for a JPM card. It's like you had to go to Wells first for 2 years to build your credit. And then I still couldn't get in. I'm pretty sure I had to buy a car, pay it off, buy a house, and have other credit cards for like 3 or 4 years before I could finally get a JPM or like a credit card from Chase. I think the first one I got was like the Freedom or whatever. Yeah. For Blackstone's property boss, the honeymoon is over. Private equity behemoth just capped its withdrawals from the B REIT. Fund at Vanguard of it. Blah blah blah. Blah blah blah. Oh, this is just a story. Oh, I don't care. This is boring. All right. What else? What else we got?
Volume and volatility, that could also be a factor in why there's some repositioning NVIDIA. That stock right now down in the pre-market.
Down in the pre-market, and certainly that's weighing on futures as well. Abigail, thank you. Now coming up, the SoftBank founder says he has plans to bring about an era of artificial super intelligence. More on those plans next. This is Bloomberg.
Whatever. They're trying to talk about the next generation of AI. I don't think it's close. I'm just I was so excited about AI when it first hit. And I'm like, all right, I think I've been pretty clear. Like, this is cool. This could help with like a 10%, 15% boost to productivity. But this, some of these latest valuations are a little kooky. Kooky! All right, let's listen to this.
They will add also, they will buy also electric. And there will be clients that they will not buy the electric.
Ferrari only produced 14,000 cars last year. Production was flat in the first quarter, but they can actually continue to make more profits on each car because of customization and higher prices. In fact, if you look at what Ferrari makes on a per car basis per dollar, they make about $126,000 per car. So you'd have to sell about 5 Porsches, about 15 BMWs, about 27 Teslas just to get to the dollar profit of a Ferrari. That's why that stock is up 27% this year. And guys, if you look at the market cap of Ferrari, it is now about 1.5 times that of Ford or GM, which of course they make millions of cars. And on a PE basis, Ferrari now trades at 50 times forward earnings. So yes, in fact, they're not just a luxury stock. They're better than any other luxury stock, certainly in terms of valuation right now.
NVIDIA. Robert, I'm wondering, are they shutting down another plant or are they actually increasing production? Because part of the allure is the rarity, is sort of the exclusive factor to Ferrari.
And Melissa, that is the delicate balance that Ferrari is trying to walk. When I asked, look, this will clearly increase production. They're not shutting anything down. So I asked the CEO yesterday, will this get you to 20,000? Will you get to 25, even 15? He refused to say. And so if they do increase production beyond the 14,000 that they had last year, it will be very incremental. Because remember, Ferraris are unique in that a pre-owned Ferrari often sells for more than a new Ferrari. And in order to maintain those resale values, they have to keep production small. And of course, as you say, they want to keep it as a hard-to-get exclusive product. So yes, they will increase production, but they're not telling us by how much or by when.
Well, Robert, that actually gets exactly to what I was interested in, which when you see the market put one of these very generous valuations on a company, it's usually because this is a business that magically scales. And that, essentially all incremental production is profit. Not really the case, or at least the model for Ferrari. Why is Ferrari so intent on making sure resale values stay so high? Do they feel as if that's one of the things they're offering to their new buyers?
It's one of what makes a Ferrari an investment and not just another car. But it's also part of why this brand...
I feel like they paid CNBC to just yap up Ferrari. You're getting a whole segment on how it's a value stock and the used cars sell for more than the new ones. Blah, blah, blah. This is like a giant Ferrari ad. Yes, look at our clean factory with robots and women. How many times did they loop the two girls? Sorry. Jaded. Yeah, look at our profit per vehicle. Oh, look at Tesla at the bottom of the list. Ay. Will you ever buy a supercar? Nope. Next thing I buy is a vacation to Europe. So, let's see here. What else? Kevin, will you buy Jack his first jet instead of his first car? I'm actually going to buy neither for him. He can buy whatever he can afford. And that's it. Yeah. Private equity. I swear that said private equity sweatshop. Just email jobs@meetkevin.com. Is this real AI we're seeing or algorithmic learning? Well, I mean, AI and is heavily based on math and matrices. Real AI. What's real AI? Yeah, I mean, if the idea is if real AI is actual intelligence as opposed to just resource regurgitation, yeah, I don't think we have real AI today. I think really what you have is, I mean, LLMs are great, and they've definitely been a leap forward. Question is, how long does that leap forward matter? And how much infrastructure do you have to build out just to maintain LLMs as AI? Somebody yesterday was like, well, I mean, even if we just keep LLMs at this level of demand, the demand for NVIDIA chips will stay at this level. I'm like, no. The demand for NVIDIA chips is so high right now because everybody's trying to build out AI servers, so you're creating something that wasn't before. And once it's built out, you don't necessarily have to rebuild those servers every single year. And so a lot of the revenues you've seen at NVIDIA has been for the build out of. It's kind of like, the way I think about it is, imagine let's pretend for a moment you're an island, and this larger, bigger country is threatening to attack you, and they've never threatened to attack you before. And you look around, you're like, oh my gosh, we have no defenses. So for the next 2 years, you go buy a crap load of rockets and, SAM sites, Patriot missile batteries, whatever, Iron Dome, whatever, right? And, for those 2 years, it's like, oh my gosh, wow, you've spent so much money on infrastructure. This is incredible. Well, then you get to year 3 and it's like, I guess we'll buy a few more rockets, but like the infrastructure's in place now. I don't have to rebuild it again unless the threat advances or there's some sort of reason that I need to expand beyond now what I've built out. So my thought is that the explosion that you've seen in NVIDIA stock and Supermicro Computer and, Dell, which is just the most stupid stock to have rallied on all this stuff, is really just driven by this initial build out. And once you actually get into sort of the recurring phase, like if AI stays at the level where it is now and you get into the recurring orders phase, that's where people are going to be woefully disappointed. Unless you have another, S-curve up in AI, which I don't think you're going to. Not anytime soon. So ultimately, that's everybody's, everyone's, what's it called? It's up to everybody else to figure it out. AI learning can keep growing exponentially, but the hardware performance resourcing does not need to increase exponentially to achieve the same results. Well, yeah, that's true, but I also don't think that AI learning can keep growing exponentially. I think it comes in step-ups. Like, I think of it more of like a staircase, and you have long... what's the flat part of a stair called? It's not the runner. That's the diagonal line. Staircase construction. We'll look it up. The treads. I should have known that. I took the contractor's test. Nobody had it. Plateau, landing, tread. Will got it. It's the tread. Brian got it. All right, we got some people who know construction in here. Bob Smith. See, that sounds like a contractor name. Who's your contractor? Bob. Bob the Builder. Josephine even got it. Special inspector here. Nice. A lot of people saying landing. Apparently it's the tread. Okay, so landing is usually like that square when you turn directions. Anyway, I actually really enjoyed studying for the contractor test. I took that like 5 years ago, but yeah, that was, I don't know. I kind of like studying for a test, studying for something. Like I always like studying for something because it just gives me something to look forward to. Like, I'll pass that test. All right. Time for more coffee. For more than 8 months, the Houthis, an Iranian-backed group in Yemen, have bedeviled global shipping. Major shippers around the world have decided discretion is better, and they're routing traffic away from the Red Sea. Houthis say they're part of the resistance to Israel. I thought this issue would be resolved when the U.S. sent warships to the region to sort of police the region. Did nothing. It's embarrassing. And I think in part you have this new style of warfare that I don't think our ships yet are all perfectly equipped for. You need anti-drone equipment, and this is a lot more novel. Okay, so in pre-market here, Nvidia's down about. I need to get more coffee. This is ridiculous. Nvidia, and I felt like I slept enough yesterday too. Anyway, Coinbase is down 3.6, falling into the open. Nvidia's down 2.9, falling into the open. Tesla's not really moving into the open. CarMax is actually up going into the open. Apple's trying to rise going into the open. BTC is under 63.8. This is not good. The trend down on BTC is continuing, and it's just a bad omen for the market. I see BTC as an omen. It's not good. How much coffee? I don't know, man. I guess I haven't even finished this cup. I'll finish this and go make some more. But anyway, yeah, I gotta go fly to Vegas this morning because we got our event. It's kind of exciting. It's gonna be really fun. We're gonna have an interactive open. So check in at 4. The interactive open will start on time at 5. Then we've got dinner, sort of a light dinner. There's a cash bar on day 1. Day 2 as a VIP dinner with an included cocktail. Yeah, that was expensive, but I'm like, nah, we need him. And some of our speakers will be at that dinner as well. And then no speakers today, but tomorrow we'll have speakers, and Sunday. But it'll be a lot. We'll kind of go through entrepreneurship, finance, real estate. It's gonna be fun. So that's in Vegas starting today at 5. So that'll be really cool. I'm excited to see Ben Mala and Kathy there. Tesla tequila cocktail? Nah. Nah. There we go. Did y'all see the coaster Max made for me? Let's see if that'll show up. There it is. Look at that. I don't know which one's which, but anyway. All right, so 3 minutes away now from El Open. Let's take a listen in over here.
Market is down 2%. 127 is your quote. Ray Wong is with me this morning. Okay, Ray, what's your price target for NVIDIA now?
0.
Well, happy Friday. The target is $200, but that's because there's a couple modes.
Okay, go ahead. Make your case for $200 on by the end of this year, I take it, on NVIDIA.
Well, you know, AI begins and ends with NVIDIA, and there's a high barrier to entry. Few competitors are going to be able to get into the chip game. There's high switching costs. Once you use CUDA on the software side, it's very hard to get off. They're the dominant one in market share. Competitors are barely catching up. And of course, their product roadmap, we're only seeing 1/10 of what they're able to deliver. And of course, they've made the GPU the standard in AI, and the growth numbers don't lie. If you look at sales, they're there. Even if the PE numbers are crazy, it's actually catching up with the sales numbers, and you got a visionary founder.
Okay, give me your list of winners in AI. Okay, I've got NVIDIA. Who's second, third, fourth, and fifth in the winners in AI? Who you got?
Well, Lauren coined the big 3, and she's definitely right. If you look at Microsoft, Microsoft is winning in the enterprise side. They're going to show AI revenue. Apple fixed everything on the AI conversation. So they're actually rebranded Apple Intelligence, their AI, which is focused on the consumer, and they're going to deliver there. But we also saw
he's got a good little pitch. I don't mind it.
Especially for creatives. And of course, with the chip manufacturers, TSMC, and then Oracle, HPE, C3, and Palantir are other players definitely here. Oracle is going to be the surprise dark horse catching up because all the AI demand is going to run on a lot of Oracle Cloud, and of course, Oracle's capability on managing data.
Okay, I want to go back to NVIDIA. I know you own it. Would you tell our viewers at what price you bought it? Just to make us all feel good.
I have it at different levels, I think at 50. Actually, I've got to go calculate back. It's probably
Who
25.
cares? Market's about to open. Got about 15 seconds to go. NVIDIA's down 2.75. Curious to see which direction it's going to go. Carmax up 4%. Tesla up about 45 basis points. Coinbase down 3.2. Here we go.
Making a good call on Apple a few weeks ago and going to 240 today. As he says, investors will now believe Apple is a leader in AI, not a laggard. Let's get the opening bell and the CNBC Real-Time Exchange of the big board. It's IT consulting company Infosys celebrating 25th listing anniversary at the NASDAQ. It's SBA Communications, owner and operator of Wireless Communications.
Blah. All right, so here we go. You've got Coinbase down about 3.68. Bitcoin still falling 63.5. Super microcomputer can't figure out a direction, down about 1.6 at the open. AMD goes red at the open. Oh, Nvidia had a fat red candle there at the open. It's now down about 3.2%. Wow, yikes. Then you've got Tesla's up about 12 basis points. 2.9 now on Nvidia. AMD's trying to go positive again. Tesla's getting a red candle here. CarMax keeps going. That's pretty remarkable. Even though their profits down like 30% year over year. Amazon moving up a little, 87 bips. You've got Enphase only down 65 basis points now. ARM is rotating down. Yikes. Yeah, that's down about 315 right now, down at 155. The stock has, had a little bit of a little rally there, so you're just starting to get some red candling and over the last few days here. So 2.8 to the downside. Looks like you're stabilizing on Coinbase, about 3.5% down. Supermicro is about 1.5% down, trying to go green here, and so is Nvidia, getting a green candle on Nvidia. Ooh, there goes Tesla. Look at Tesla getting some momentum there. 89 to 90 basis points up right now. And AMD giving back a little bit of those gains yesterday. Big red candle there on AMD. Down about 0.5%. Supermicro down about a couple percent. Nvidia is trying to get back to about just 2% down. All right, let's listen in here for a moment.
Eventual market for this drug, but really good news for Sarepta, and we have follow through from Gilead too. We mentioned that yesterday in terms of being a winner, and so you have these sort of green shoots in the biotech sector, and you got to wonder if that's going to help the overall sector, which has been flat this year, IBB and XBI. So whether you want to go market cap weighted or more leaning towards the small caps, both have just not really been performers at all so far this year.
Yeah, it's been a similar story to other areas of growth, which is we know what Lilly can deliver.
CarMax starts rotating down, now only up 2.5.
There's no reason.
Coinbase back to about 4% down.
For fresh ideas. I mean, Sarepta, it's doubled since November, but it's doubled and halved so many times I can't even keep track over the years. It's been one of those names that kind of epitomizes what biotech investing is.
You mentioned Lilly. It is positive today. It did have that sort of signs of a reversal, although the volume wasn't there to be completely concerning, but the price action happened in yesterday's session. I spoke to Jared Holes yesterday on Fast Money Mizuho, and I asked him whether or not he would rather put $1 into Lilly or in Novo, and he said Lilly. And I asked that question because Lilly, in addition to having the GLP-1 pipeline, the orals coming up, they also have the Alzheimer's kicker. So he thinks that the pipeline is better.
I hate to say it, but today just feels bearish. I'm trying to be bullish here, but it just feels bearish. I'm just looking around here. Look at this. Tesla was up about 1.2, and then you just get slapped with a giant red candle. You've got Nvidia, which keeps trying to get to 2%, but then just gets rejected and goes down. Then you've got Coinbase, which is about 4% down. AMD is trying to go green, or trying to stay green here, about 30 basis points. We'll see what direction we can go. Oh, there we go. Tesla popped back up again. So I don't know. The first 15 minutes are always scary. It's just because there's so much volatility. Dell down 3.7 right now. Qs are down 14 basis points. No clear direction on the Qs. DJT is moving straight down. All right. Let's see if we hop on over here. Record travel expected July 4th.
Okay, first of all, what's the problem?
Pay. 28,000 of them could walk off the job because they haven't gotten a raise in 5 years. 5 years' time.
Do we know when?
Well, this summer. So here's the deal. American came in and they offered them an immediate wage increase of 17%. And the 28,000 strong union says, well, that's not enough. We're done. We don't want to engage in discussions anymore. But that's just not the way it works. The National Mediation Board needs to come in and grant this mandated cooling off period. It's 30 days. And then after that month's time, they could potentially strike. But President Biden can also come in and force them to talk some more. So, yes, it could happen this summer, but it's likely not to happen.
Got it. $11.
Somebody says, if Trump wins the debate, DJT will skyrocket. Does anybody think Donald Trump is not going to win the debate? Like, I wonder how much of that's already priced in. I don't know. It's gonna be. I'm gonna live stream it. I'm gonna give my opinions there as it happens. But oh my gosh, I don't know what to expect. Oh, it's been a long time since we've seen them debate. You're talking 4 years, basically. Oh, man. It's just nuts. Nuts.
Cost is to buy a sandwich should you forget to bring your own lunch. And I think
Nvidia is only down 1.5 now.
we're still being paid well. I'd rather save money and work from home and forego that promotion.
That's understandable, I guess.
Yeah.
Especially if you're in a kind of a job where there's not that many promotional opportunities.
Right.
You can say goodbye to that.
Plus, in
the
this
advantage is working from home.
Yeah, in this labor market, they're playing chicken with Dell and saying you're going to find somebody else to do these jobs. Nobody can find people for these jobs.
But if
Fire
you're
us.
Dell, which is a technology company, it's arguably easier to work from home. But what do? How do you get your employees back if they keep giving you pushback? Right? I mean,
A lot of employers facing exactly the same situation. Then we have Smith & Wesson. They report strong sales. People are still, well, why is the stock down 10%?
Okay, so here, quarterly sales rose about 10% from a year ago. The CEO...
Apple just gave up a little bit. Apple's about to go negative. And Nvidia's still trying to recover here, but I don't know. Some like bearish sentiment in the market today. Nvidia or AMD keeps getting rejected. Nvidia's going back to about -2%. Tesla can't stay over 1%. It's tough. That's why I don't like making moves the first 10 minutes. Just such quick U-turns. You can't even get your stop losses in before you get a U-turn.
Thanks, Lauren. Coming up, here's a good one. Climate activists tried to take aim at Taylor Swift. They thought they spray painted her private jet. Turns out they got the wrong plane. We're all over that one. For the first time ever, women could soon be required to sign up for the draft.
You gotta suck pretty bad to, like, basically set yourself up for going to jail and then get the wrong plane. God. It's crazy. Literally, actually, it's crazy. I saw a funny tweet. Somebody's like, I think Don't Stop Oil is secretly funded by the oil industry because Don't Stop Oil makes people hate climate activists so much, it makes you want to burn more oil. I'm like, damn. I love that reverse psychology. It's like, yes, let's just have the most loony climate activists, and that will make people stop caring about climate activism for fear of being associated with them. It's so funny.
Processes. That's because of years and years of single product software things that through acquisitions and everything else, and you just kept everything in parallel, and there's so much compliance, and you have to have approvals. So I just wonder how fast it happens. There's just a built-in inertia to financial services because of all the regulation and everything. So we'll see.
I mean, some will say the same thing about insurance. I mean, insurance has the biggest opportunity to automate. Think of all the paperwork that is submitted to an insurance company that could be reviewed by AI, but a lot of these companies are giants. They're big boats that are hard to turn. So it's hard to sort of implement that technology, but we'll see how it plays out.
Yeah. A business full of models and actuaries, right, who have to make difficult calls. Yeah. Meantime, our next guest does think it's unlikely the Fed cuts rates this year. Remains positive on equities, though, favoring information technology, communication services, consumer discretionary, industrials, financials. Oppenheimer, we were just talking about them. Asset management chief investment strategist John Stoltz was here with a target of 5,500. Happy Friday, John. Good day.
Nvidia's right back down to -3 right now. Let's see if it can bounce.
Prevents the Fed from cutting.
I think it's just the stickiness of inflation and a concern by Jerome Powell that he doesn't want to cut rates and then have to go back and raise them again. I think the big thing is, the Fed has now, since March of 22, has raised rates 11 times, paused 8 times without a recession. That's really quite an accomplishment. It's helped, of course, by the resilience in labor. And
got data coming out in about 5 minutes. You got those PMIs coming out.
Growth, but at the same time, the Fed, we believe, has done a really good job, and they don't want to ruin it.
Would you agree that the market is trying to call his bluff?
Oh, you bet. The market represents many different constituencies, and in particular, the highly leveraged crowd has been really hurt by the higher rates. You go from a band of 0 to 0.25. to 5.25% to 5.5% on the benchmark rate, that creates the VIG is a lot more costly, carry cost, it's all problematic. And so when we look at that, that's an argument that occurs. But overall, you know, it's not a bad situation when bond issuers have to pay for the privilege of borrowing money, and people, when they build their models, have to think a little more responsibly than they may have when money was for free.
We're at your S&P price target. So how are you feeling? Do you feel like there's a need to push that higher at this point?
Melissa, I think we certainly, once the market closes at 5,500 or above that on any given day, that's when we'll review it. And it would seem now that we are still very much in a bull market that is supported both by fundamentals on a cyclical basis, as well as secular growth stories that are impacting this. The other side of this is, too, I think the general population today is more concerned with retirement planning in realization that Social Security might not be anywhere near what it is meant for people. So whether a younger generation is planning for retirement years and years ahead, people who just have retirement a few years ahead, or those who are in retirement who want to retain their standard of living for a lifetime that might be a lot longer than they ever expected. Equities is a solution. Past performance, no guarantee of future results.
Yeah, although I guess the question is...
All right, boring. Let us try jumping over here. Yes, buy stocks to retire, they say. You gotta get some people on CNBC that are like, you know, you gotta buy real estate to retire early. Imagine. It'd be so boring.
As we know, a reasonably consequential year for politics, and so that's an unfolding story. But again, it is part and parcel of most sort of climactic emotional rallies, which this one is not, that you do get M&A activity and IPO activity. And frankly, when you look at the bullish sentiment readings, they're not there yet either, which, again, is heartening to us.
And I feel like depending on how I wake up in the morning, I could feel like the lack of IPOs is either bullish or bearish, because it could be taken bullish as in, okay, we're not in a bubble. It could be bearish as in, what do these companies see that is keeping them out of the public markets, keeping them from leaving that pipeline? I mean, how has your view on that evolved?
Well, I think, look, the private markets have been very robust. We know that there's been swings in valuation over the last 4 or 5 years, but ultimately, you know, as in past cycles, the eventual strategy for a good swath of those companies will be going public. And we do think that that is part of the calculus. And then, of course, on the M&A front, there's just a huge amount of cash on hand in corporate America that, you know, whether it's AI-driven or just, you know, other forms of synergies, we do think that that cycle will reappear before this, you know, rally ends up peaking.
And Julian, before I let you go, I do want to talk a little bit more about private markets, because I'm having to pay a lot more attention to them, not just when it comes to private credit, but to that point, it feels like private are extremely hot right now, and they're getting bigger. And obviously you live in public markets, but are you finding yourself paying attention more to those still private companies?
Well, you have to, and particularly on the credit side, because I think that
So it says that Vivek just bought Clover Health. Vivek is the CEO of that company. He just happens to have the same name as Ramaswamy. It's actually funny because, like, the guy's probably just leveraging Ramaswamy's sort of popularity. That's kind of funny. It's actually brilliant. Clover Health. $640 million company. It's smaller side. Scott says, did I hear this correctly? Your thesis is 2% 30-year interest rates by 2030. No, it's under 2%. Like, more like 1.7 by 2032, 2033. Right in that sort of range. And my 10-year thesis as a result is buy as much real estate as possible, because you're going to want real assets when rates are low or negative. I think basically the risk-free rate will go negative. The trend that we saw before the pandemic will resume. We'll look back and see the pandemic as you know, basically this flash in the pan, and a lot of the distortions of the pandemic will certainly take a while to go away, but once they're gone, they're gone. Oh, let's listen into the PMIs.
In the final analysis, we're looking for all numbers to be over 50.
But yeah, we'll go back to, what's it called, the trend of lowering rates, and then we'll go to negative rates, which will be really entertaining.
Whereas last year, of course, we finished the year with under 50 reads. 51.7 is the best since March, when it was 51.
They're all stronger than expected. All of the PMIs came in better than expected.
55.1, well ahead of expectations.
Which might mean slower rate cuts, right?
Following 54.8. 55.1 is the best read going back to April of 22. April of 22. And finally, blend them together in the composite, 54.6. That follows 54.5. 54.6 is the best read, also since April of 22. So you do see the interest rate side moving a bit higher. Pre-opening equities should improve somewhat. On the week, very fascinating. At 472 on the week and a 10, we're basically unchanged on the week. We're down on the session. And at 425 for 10s, well, now we are about up 3 or 4 basis points on the week. Prior to this number, we were down 1 basis point. So we've had a 5 basis point move on the long maturities on this number, something to pay attention to. Squawk on the Street will return after a short break.
Yeah, so stronger PMIs again. It's just gonna lead the market to go, this sucks because it's gonna mean rates are gonna be higher for longer because the economy's doing well. Yeah. Yep. That's right. It's exactly, unfortunately, what that means. Rip-de-doo-dah? Rippity-doodlah-doodlahs? What the hell is this? I just wanted to go to Fox. There it is. How hard is that? Oh my gosh, now they're playing Frank Sinatra. These finance channels. Boring. Boring. Gosh. Alright. Fine. Jump over here. Tesla just went negative. Nvidia is now down 3.25. Oh my god, they're all in commercial. What freaking trash? Trash. Alright. Fine then. So, alright, let's see some commentary y'all got here. Let's see here. Can we watch TV with you? Sure. Need a green day? Just Googled it because the TA analyst I follow. Oh, okay, yeah, you had a little bit of an explosion there in Clove. Yeah. Da 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 da. Let's see if you can get a rebound on some of these AI names. That's what I'm kind of watching for right now. PMIs are over. You've got AMD about 1.4 right now to the downside. Supermicro's down 3. Nvidia's down about 3 1/3. Tesla's red. I told you I was feeling bearish. I mean, Etsy's the only thing really green right here, but you know, I've been saying it all morning. Like, I'm not trying to be a bear. I'm just watching the pre-market and Bitcoin and now incorporate what the PMIs sort of signal. I don't know. What's very interesting, though, is the consumer-related stocks are actually doing decently. You've got Amazon and Etsy moving nicely. Well, for right now, I don't know how long that'll last. I mean, as I'm talking about Amazon, I'm getting a giant red candlestick here, so maybe I gotta just, like, not click on these names for now. So, danger, stranger danger. But Nvidia at the moment continues to drop. So, I don't know if that will continue, but it's going to be something to pay attention to. It's entirely possible that the entire sort of AI market just has a little sell-off, del-off today. oftentimes you get these sell-offs that start, they sort of just, like, then you get fund managers that wake up and they're like, oh yeah, actually, I wanted to close some positions on AI too. I wanted to take some risk off the table too. So, no guarantees, but whatever. So, I will, as usual, send all alerts to those of you in the Stocks and Psych group. In fact, I'm about to send an alert. And encourage you all to check it out at meetkevin.com if you haven't considered joining yet. Big fan of providing as much value there as possible. And even though yesterday we made $94,000 trading with about 70K, yeah, that's more than a double. No guarantees we can continue to make money. That's just a goal. Goal is make money. It's I was trading somewhere between like 50 to probably 90, and an average is probably somewhere around 70. The long-term goal, though, is just to grow the trading account as high as we can go. And so those are my goals. I try to be transparent about my mistakes and my failures. And we'll kind of watch what the market has to do. So this is NVIDIA for you. It's now down 4.2%. You are getting a little bit of a green candle right here. You've got, it looks like, let's see here. That's NVIDIA. Supermicro is down about 5%. AMD keeps falling. AMD is down about 2.2 right now. It's falling faster than NVIDIA is falling. You've got, is it going to try to make a green here? Yeah, it's trying to make a green candle right now. Let's keep an eye on that. And then you've got, nope, never mind. Couldn't even pull that off. NVIDIA is now down 4.5%. You've got Supermicro now down 5.5%. Tesla gave up its green. ARM, that was another one I was looking at this morning, down 5.5%. These are pretty big moves right here in the market. It does look like Bitcoin is falling as well, and that's after the PMI lines coming down. Let me look at Palantir. Somebody's saying Palantir's falling. Yeah, wow, Palantir's down 6%. NVIDIA keeps going right now. Now, there will be a rebound. Like, at some point, I would expect that there's going to be some form of a bounce here. There usually is, but right now it just feels like it's going, there it is, here it comes. Let's see how robust that bounce is. Can we actually create a green candle here on the minute or not? Looks like AMD, NVIDIA trying to green candle right now. Supermicro tried and went red again. AMD's pushing green. AMD's trying to push for a green candle, and that's a pretty big green candle right there. And let's see here. You've got NVIDIA's pushing a fat green candle as well. Okay. Will probably. Okay. So, boom. I had a trade that just stopped out, which is perfect. So I set my stops. I sort of increased my stops over time. And that just picked up. What did I put into that trade? That was, I traded 1,000 shares at 99 cents, or options. So I went into something at $99,000, and I think it picked up like 10K, 13,000 bucks, about $12,979 in a few minutes. That's pretty good. I'll take that. I'm gonna come back for some more. So that's good. I'm gonna keep this. I think this trend is gonna continue today. So I think there are plenty of, pun intended, options to pick up. So then, yeah, BTC now rotating up. So I like to watch when BTC rotates up for some stabilization or consolidating. This is Tesla here at also consolidating down about 30 basis points. You've got, let me see here. Okay, perfect. Then I've got, Palantir's now trying to bounce up at about 5.7. Anyway, when I see trends like this, like I said, I can't guarantee that you're going to make money, but when I see trends like this, I send an alert and I put an alert out and I'm like, hey, I'm going to set limits. I'm going to go in. I'm going to move up my limits. You know, the idea isn't for you to copy. The idea is for you to sort of like, oh, okay, like, what do I think about that trend, right? Because I don't give personalized financial advice at all. So ARM is continuing to bleed down here. ARM did not recover like AMD and NVIDIA are trying to, and I don't think any of the sectors really going to be able to hold on. But BTC is recovering a little bit. And let's see here. Yeah, I do have MACD up, but I also have tight. Usually what I do is I have tight stop losses. So, and what I do is I raise the stop losses. So, for example, I go into a position. If I'm on a trend, the position's going to gain value, and then I'll raise the stop loss towards actually a take profit, right? But I just keep raising the stop loss. And then usually I have it pretty tight and it pops out pretty fast, but it's because what I'm trying to do is lock in gains. Like I've traded too much to know that if I don't have stop losses, I could get absolutely obliterated really quickly. And I've seen gains turn into really big losses really fast by not having stop losses, because you'll see like a big red candle and then you'll get emotional. It's like, oh, it'll turn around. It'll turn around. Sometimes it does, sometimes it doesn't. But stop losses just take the emotion out of trading, and so they've I would say increased my success substantially over the last few weeks, which is great. Look, Nvidia is slowly climbing here, so you're getting a nice little climb on Nvidia. That's probably going to that's going to arrest some of the collapsing that we're seeing here. But you would expect to see some kind of bounce. And it wouldn't surprise me for you to get a continuation of a sell down a little later in the day. No guarantees, but that's just something I'm going to be paying attention to. I think people are going to get a little spooked here by some of these movements and maybe take some of the chips off the table, so to speak. I'm watching AMD. It continues to signal some red here, where Supermicro is trying to recover, and so is NVIDIA. So Supermicro, NVIDIA, they're trying to recover. Although AMD did not fall as much as the others, I would expect it to sort of follow some of these others. Coinbase is recovering now. Etsy keeps chugging along. All day long, Etsy's been moving up so far. ARM's trying to recover, and Tesla just gave up. I mean, this is why, like, I was watching Tesla go from like 50 basis points to 1% right at the open, and it was very tempting to buy calls. But I'm like, Kevin, first 15 minutes, just wait. And then sure enough, you get a consolidation and a downtrend right after. So I don't like the first 15 minutes, because this is the mess that happens. But then look at what happened after the PMIs. The first 15 minutes ended right here. You got your consolidation. 15 minutes over, boom, downtrend. And look at how long the downtrend was. It was not very long. 47 to about 54. You had about a 7-minute downtrend to play there. So it was a very, very short term, but I think it'll come back. So I think the rise that you're getting now is just an opportunity to reload on the shorts. No guarantees, but that's what I'm going to be looking at. And like the more these go up, I'm looking at sort of the entry prices on some options. The more these go up, the better my entry price is going to be on a reloaded short. So I'm not sure yet if I'm going to stick to a single name or if I'm going to go for a multi-name. Usually I like single name trades. It's too much to follow otherwise. But let's listen in over here for a moment.
Not that much in the way of inflationary price.
But yeah, anyway, the next coupon code is live, and it expires, I think, next Wednesday for the debate. So it's coupon code debate. And so, anyway, go learn more at meetkevin.com. Remember, past performance does not guarantee future results. All right, what do we got here?
Dystrophy getting expanded approval in the U.S. to include more children with the deadly and rare muscle disease, DMD. The approval expands the market.
Tesla's trying to push green here.
Treatment that still hasn't proved its benefit in clinical trials. The treatment, priced at $3.2 million, was cleared under an accelerated approval pathway. We're watching Apple today. Bernstein's Tony Sacconaghi raising his price target to $240 a share from $195, saying investors now believe the company can, quote, be a leader, not a laggard in AI. And a tough week for the retail trade, with GameStop shares losing steam, down double digits since Monday, and shares of Trump Media on pace to end the week down 30%. And we are watching both silver and gold. We just saw silver take a major leg lower just the past couple minutes, now down 3%. We'll keep you posted on that one.
All right, some fresh economic data just crossing the tape. Rick Santelli has that for us. Hey, Rick.
Yes, leading economic indicators for May are out.
Ooh, worse, negative 0.5%.
Well, it's down 0.5%. Down 0.5% is the number. And what is interesting about that, Mike, is that means that 2 out of the last 27 months, only 2, have been positive. And those months were February of this year and going all the way back to February of 22. So leading economic indicators has really not led us down a very accurate path. And last month's down 0.6%. That was the worst since October of last year, when it was down 0.9. Interest rates reversed off the lows of the session on that strong service sector PMI. Also out right now is our May read on existing home sales. And of course, for that, we head east to Diana Olick. Diana?
Well, Rick, existing home sales in May were essentially flat, down 0.7% from April to a seasonally adjusted annualized rate of 4.11 million units, according to the realtors. That's a little better than the street was looking for. Sales down 2.8% year over year. Now, these closed sales are based on contracts likely signed in March and April. Mortgage rates took a big leap in April before settling back slightly in May, but we're still over 7% on the 30-year fix. The headline in this report is that inventory is building, up 6.7% month to month, and up 18.5% from May of last year. Now a 3.7-month supply at the current sales pace. I would caution, though, that despite the gain, supply is still very lean. The median price of an existing home sold in May, $419,300. That is a record high price and up 5.8% year over year. All regions saw price gains. I would note that's a median, though, and it's skewing higher because the higher priced homes are selling more. There's more supply over there. The realtors did note in the release that the mortgage payment for the average buyer is up. Typical home is up over double what it was 5 years ago. Cash is still king, 28% of sales, and first-time buyers kind of hanging in at 31% of sales, up from 28% the year before. And Carl, the chief economist, said he was surprised at that.
Diana, we were talking about mortgage rates offering a little bit of relief these last few weeks, and I know next week we get new and pending. Would that be reflected, you think, in next week's batch of data?
Okay, so these are based on different stats. So new home sales are based on contracts signed during the month. So when we get those for May, you're going to see that lower impact rate from rates came off the highs in April and were lower in May. Same on pending home sales, because again, those are signed contracts. So you might see a bump in that. For the builders, of course, remember, you have to remember they are buying down mortgage rates. So the mortgage rates do mean something to the new home buyer, but they're getting a break on those concessions. And we heard from a lot of the builders reporting in the last week or so that they are still doing those concessions, the buy down, some of them increasing their concessions, in fact.
It'll be a busy week next week, too, Diana. Thank you. Diana Olick this morning. Meantime, a whole lot more. Now, look later on this hour when we check in with the co-founder and CEO of Compass, Robert Reffkin. Stay with us for that. Meantime, the NASDAQ snapped its longest win streak of the year, but still on pace for 8 positive weeks in 9, along with the S&P. We are bracing for some volatility with some key events ahead today in particular. Bob Pisani is with us to explain. Morning, Bob.
Morning, Carl. Good to see you. The S&P 500 is having its usual quarterly rebalancing today, except this time the big moves up in NVIDIA is causing some rather notable movement in some of these indices. The Technology Select Spider ETF, the symbol is XLK, it's got about $72 billion.
Yeah, a lot more NVIDIA versus Apple now. This rebalance is intense.
It tracks the S&P Technology Index, and it too, along with all the other S&P sector ETFs, is also rebalanced on a quarterly basis. That's today. Fairly routine. But the relentless rise of NVIDIA, it's up about 40% this quarter, is shifting the weighting for two of its top holdings in a very major way. NVIDIA will go from a roughly 6% weighting in the ETF to a roughly 21% weighting in the ETF. That's a big move. And Apple's doing exactly the opposite. It is going from a roughly 21% weighting in the ETF to 4.5%. The other major component here, Microsoft, remains at a roughly 22% weighting. Why is this happening? This is all because of federal rules that were put in place in the 1930s to avoid having too much concentration of any one stock in an investment fund, like a mutual fund or an ETF. That's what they are. They're investment funds. An index like the S&P 500 that's weighted by market capitalization has no limits on how big a stock can get in the index. It can get as big as it wants, including NVIDIA. But an investment fund, like an ETF, does have limits. That's the distinction.
Yep.
Federal rules, no stock could be more than 25% of the fund's exposure, and the combined weight of all stocks bigger than 5% can't exceed 50% of the fund's holdings. It sounds complicated, and it normally doesn't matter, but here it does. So right now, the combined weighting of Apple, NVIDIA, and Microsoft in the index is around 64%. So the ETF has to adjust its weightings because it can't have that big a weighting of those three. Microsoft is going to retain the top position, but number two is now NVIDIA, and Apple is a distant third. So that XLK will be selling.
They screwed up the the image. Those were the old weightings they showed on screen.
At the close today. This sounds like a lot, but it's really not a huge amount of money. NVIDIA, for example, routinely trades about $50 billion a day. But with about $9 trillion now invested in ETFs, here's a very good example of how concentration can affect investments. And guys, this is a problem as the big are getting bigger in general, not just in technology. So, for example, Exxon is almost a quarter of the S&P Energy Index. That's bumping up against the limits. Amazon is almost a quarter of the discretionary.
AI keeps pushing up, by the way.
Against the limits. And Alphabet is almost a quarter of the Communication Services Index, ETF rather, and that's bumping up against the limits. So as the big get bigger in general, this may be an issue because these ETFs may not necessarily track their underlying indices going forward. Traditionally, they have, but again, big getting bigger. Here's a good example of how it affects investing, guys.
Yeah, Bob, it's a great reminder that there's this tension.
Yeah, I don't know how much of that is already priced in, though, the difference between NVIDIA and Apple. I mean, frankly, if it wasn't already priced in, NVIDIA should be green today, except, because it's supposed to have a lot of buying, supposedly. But the sucker's at -3%, Now you are recovering off that sell-off that we had there. You have AMD is at point, what are we at here? Well, you're down about 1%. You're trying to rise. So is ARM. ARM is a little bit more volatile, I'm noticing. So a little bit more activity here. And Palantir's recovering. Tesla's stuck in the mud. But Etsy stopped rising. Bitcoin's kind of stable. Everything just feels somewhat stable right now. Kind of have to wait to get a little bit of direction here. No giant trend in one direction. I always like giant trends. I like big trends. Big! Very big! We gotta have some bad news sounds. See, that's... Who knows what that's from? Anyway. Somebody said it would be too annoying if I pressed too many of them together. I don't know, I kind of think it's fun. Alright. Okay, so... consolidation on Apple. Tesla's trying to push for a green candle, but that's a pretty gnarly consolidation. It's gross. ARM keeps rising. Bitcoin's not doing anything. Super Micro's trying to come back up. AMD is trying to come back up. NVIDIA is trying as well. Apple's consolidating. Where are the movers? It is from RuneScape. Yeah, good job. Virgin Galactic's moving. Owlet's moving. You got some smaller ones here. Ember Air's up. Short ETFs are up. Robin the Hood's trying to rise. Look at that. 67 basis points right there. I'm going to put Hood. I want to keep an eye on Hood here. Boom. 69 bips. Let's go. So Microsoft, Amazon up. What's down? You've got Palantir at -5%. Trump Media is -5%. Coinbase, wow, 4.5% on Coinbase. That's a hit. Ooh, Nvidia, I feel like just legged down again a little bit. Yeah, there goes Tesla again. See, these consolidations, that's not what you want to trade. That don't trade. Yeah, there goes Robinhood. Okay, Coinbase is now down 5%. What just happened? Holy smokes. Just got a fat candle there on Coin. Let's see here. Let's see if there's any news. I don't really think there is, so it could just be trading. Nope. No particular news. So, just trading activity. Ah, there goes ARM. ARM tops off. Tops off kind of where it opened, frankly. Yeah. Just roughly smidge higher than where it opened. Yeah, no, nothing violent in one direction yet, though. One direction. Oh, and Hood comes right back. All right, let's go back. Let's go listen over here. What do they got? Yeah, tell us about NVIDIA with your AI basket.
Portfolio was actually up on a year-to-date basis. So as much as people want to be creative and diversify, it actually hasn't helped you from a return perspective, which is pushing people back to NVIDIA.
Are you a buyer of this theory on the software side that hardware is starting to eat into software's model? That just makes it too easy to create a software startup?
Yeah, you know, I'm invested in it, yes, but I think what the market's told you over the last 4 to 6 weeks is unless you can demonstrate AI revenues either directly or in a pretty forecastable way, investors are going to be a little skeptical about owning those stocks. So the concept makes sense, but from a price perspective, it just hasn't worked that well because the bar is just really high right now. You know, if you're a software AI stock and it looks like actually instead of getting AI revenues right now, you're making a big AI investment. Well, that's a tough thing to hold over a short window. So yeah, like medium term, I think the story makes a lot of sense. I think there's two challenges. One, picking winners and losers has been exceptionally difficult. Things that you thought were losers became winners and vice versa. And secondly, a very small number of stocks are actually demonstrating revenues. And I would say the cost cuts are probably quarters in the future. So you're kind of in like a weird pivot point right now.
So you think tech goes through another sort of adjustment on costs, kind of like we saw with some big hyperscalers last year?
Well, I think it's tech and it's also outside of tech, right? I mean, NVIDIA and AI is read as a macro theme, right? This is not just stock specific. It's going to create a more efficient economy. It's going to lower, employment expenses and operational expenses. That stuff, if you believe it, is just not happening here and now, right? Actually, right now, we're still in the CapEx cycle, which is why NVIDIA is doing well and why Accenture put up good results yesterday, because they're beneficiaries of that CapEx.
10 years had 4.255. Which is interesting. It's kind of seen the 10-year go down from about 4.45 just a couple weeks ago down here. I got a memo for bond market too. Listen to this.
Bond market.
Along with this.
Coupon code expiring soon. Coupon linked below.
I don't know. I like that kind of stuff. Soundboards are fun. You got to add some jolly to the finance world. The finance jolly. Thank you, Donald, and I can't read that. Kionest, Yati, Bradley, Nico. Thank you for joining the Stocks on Building Your Wealth course. Actually, somebody here bundled up with the gold course. I think I have a thank you for that as well.
Thanks for joining Meet Kevin's courses.
Yeah. All right, let's get back to what we're doing here. Boom. Somebody says triple kill. No. I got one for you. Ready for this? Instead of triple kill, if you have a bad day in the stock market, we call it you got reamed. Remember reamed, creamed, and edged? So what? You ready for this?
Reamed. Double reamed. Triple reamed. Reaming spree.
Yes. Oh man. All right. So Yeah, get your Riemann spree in. All right, so Palantir's now only down about 4.3. These are amazing. Yeah. Yes, I love them too. I love them a lot. Do I have anything else that I haven't shown off yet?
House hack. To the moon. The Nike swoosh.
Let's go. Great. All right, let's focus. Oh, look at BTC's trying to recover. Oh, that's really good for Coinbase. Look at that. Nice recovery there. 63.8 all of a sudden. Very good. So keep an eye on this puppy. So good old, what do we got here? Coinbase. You've got, wow, why is BTC just sort of like running all of a sudden? It's pretty cool. I don't know where it's coming from, but good for it. So yeah, BTC's really pushing here, and it's trying to, it looks like Nvidia and them, they're trying to move up with it. Okay. See how stable that is. It's really interesting. Yeah, that's a good break. That's bullish as well for Tesla. Let's see here. No, the market's actually not reacting that heavily. You got Apple trying to react. Dell slowly moving up after that opening sell-off salvo. Okay. See if we can hold that up. Alright. Is there anything else to cover? I think we've kind of covered it all. Oh yeah, there comes the red candle already on BTC. Alright, what do we got over here? Oh, boring. Oh, big gap down now on BTC. Never mind. It was just clickbait. More Ferrari coverage? Oh, they went from CNBC to here? Dude, they're doing the circuit today.
Of the technology neutrality.
This is not a circus. What is this?
For our segment.
All right, appreciate that clarity there, that it's not about just increasing the numbers. But that being said, how many cars could be produced at this new e-building?
That's the same thing they asked at CNBC, and they're like, no, we keep the value high of our cars. We won't overproduce. It's a big ad.
It's meant to increase the ability to develop unique product. It's meant to increase the possibility to personalize more the cars and offer the client what they select. It's not meant for increasing capacity.
All right.
We want always to push for value, not for volume. This is important for our company.
Quality, value, not quantity. I'll move on, I promise. Let's talk, of course, about the all-electric Ferrari. It's coming, of course, in the fourth quarter of next year. When might you actually start production of that new vehicle at that plant that you're standing in?
We unveil a Q4 25, and after that, in 26, we will start to see electric car in this factory. For the time being, we have several prototypes on the road. They did several thousand kilometers, and everything is going as planned.
Everything is going as planned. Well, I do want to talk a little bit about pricing here, because there was a Reuters report in the past couple days reporting that this new EV will cost at least 500,000 euro. Is that...
Tesla just went red, and Nvidia is starting to decline again.
Look, usually we define the price of our car 1 month before we unveil them. So this is something anyone can speculate. This is a speculation. I think that you have to wait a little bit to know which is going to be the price for our first electric car.
Is there any sort of range that we should be keeping in mind, of course, as we await for the official price?
You know, we don't like to talk too much about these things. We need to talk about, we want to make unique cars that are unique for our client, that are delivering unique emotion. So let's wait for that. And then we'll talk about the price.
This is such political bullcrap. I swear, it's just an ad. We want customizable car. Okay, so when are y'all gonna produce more? No, that's not the goal. The goal is for you to buy a customizable car. Okay, so when are your revenues gonna go up? Customizable car. What about the EV? How much is it gonna cost? Customizable car. Okay, dude.
encourage more development, more permits. It would be great if we could figure out how to make mortgages assumable so people feel like they won't lose their financial asset, that low mortgage rate, if they sell their home. And we could also benefit from 1, 2, 3, 4, 5, 6 rate cuts to help bring mortgage rates down.
I'm wondering, and I know the New York market is very different from many other markets.
Compass CEO. Yes, please cut rates quickly because we are not making as much money as we used to.
I've noticed a lot of price cuts in the market, and I'm wondering if that's what you're seeing, and if sellers are really reflecting the idea that perhaps in New York there might be inventory that people don't necessarily want, and they have to adjust their prices to reflect the mortgage reality.
It is somewhat of a confusing market because there are mixed signals. On one hand, you have prices at the highest in recorded history. But on the other hand, you have more homes today on the market with price drops than any time in the last 10 years, which reflects that buyers are pushing back. Right now, it's 36.1% of all homes on the market have had a price drop. That's 16% more than it was this time last year. This time last year was 31.4, so 16% higher, 36.4. So we are seeing these somewhat confusing signals. That said, I would expect prices to be relatively flat. On a month-over-month basis, they have been flat. It's the year-over-year where the prices are up.
You know what? The town that gets a lot of attention on the inventory side is Austin. And I wonder what you think about
Bitcoin over 64.
they get over their skis in the way of supply.
Well, there's no doubt about it. Austin last year had the negative impact of, as you say, getting over its skis, being somewhat overbuilt, and a lot of influx of people from across the country, particularly California, moving to Austin. But they took the pain last year, and the pain isn't there as much anymore. Last year, prices were down very meaningfully, as well as transactions, but we've seen a pretty significant recovery relative to last year so far this year.
When you think about MSAs that would be an echo of that this year, what comes to mind?
I think Florida.
Really?
Florida.
You mentioned Jacksonville, we put on the screen.
We're seeing more inventory being built up in Florida than any other market, and we're seeing more price drops in Florida than any other market. And so I think that's the market that may deal with the pain.
Is it predominantly single family or multi as well?
Single family, condos, both.
Yeah, gotcha. Robert, appreciate the time today.
Glad
Thanks
to be
a lot
here.
for coming by.
Coming up after the break.
Boring. Watching ARMS trying to roll over. It's not really going anywhere right now, though. It's trying. And then you've got Etsy rolled over. Bitcoin is actually trying to be happy and optimistic. It is not taking Coinbase with it. Not exactly sure why. Usually it does, but it's not. So that trading pair is not working today. Then you've got Nvidia rolling over. Yeah, this is what it sounds like over at Nvidia.
Selling spree.
And
poopy doopy.
At 4%, followed by 4% day yesterday. It's a pretty big deal, especially if you measure it to the top yesterday. Yeah. So yeah, too much consolidation here in these AI plays. Same thing on Tesla. It's just you're not really getting a trend right now. Boring. Except for BTC going up, which is technically a bullish omen. Yeah, well. So, okay, cool. I don't know. Anything else to talk about? And check Uber. Ew, why would I do that? I don't want to check Uber. Boring. No volume. Consolidating. Gross. Get it off my list. Ugh. Yeah, ARM's trying to trend down, but you keep getting all these green candles in it. It's hard to play. Yeah, you get some, real pain. Like the house.
The House of Pain.
Sell, sell, sell.
All right. There. That'll help some things turn red so you can short. Okay. What else? Let's see here. Well, there wasn't really much in the way of other news. I mean, we covered the catalyst. It's pretty boring. And I think bond yields are flat. pretty much. I mean, like a smidge up on the 10. Wonder how our inversion's doing. Let's see. 210. Negative 47 on inversion, so that's pretty stable in terms of where we've been. SoftBank's founder sketched out ambitions for AI to be 1,000 times smarter than any human, making grandiose pronouncements in Japan. Okay. Supreme Court rules in favor of Biden administration defending federal gun ban for domestic abusers. Ooh. Okay. Domestic violence is a bad thing. Robin Hood rolled over. Palantir rolled over. Tesla's not going anywhere. ARM's not really going anywhere. Etsy's not really going anywhere. Coin's not really going anywhere. Bitcoin's trying to come back down. Supermicrocomputer's trying to come back down. AMD's not trying to go anywhere. Nvidia can't figure out what direction it wants to go. Neither can Apple. This is poopy doopy. I don't know what to do. This is boring. You can go get some coffee. We'll do the course member live stream. If you're not part of that yet, make sure to join the courses. Link below on Building Your Wealth. Ethereum, 35. Yeah, Tesla. Nah, boring. All right. Last check. Please don't tell me they're talking Ferrari again on CNBC.
The demand will be strong.
I tried it, and I had this kind of...
Don't care. God.
The board, which was very interesting, that divergence between the U.S. and the rest of the world continues. Now, coming up, Taylor Swift's record-shattering Eras Tour is supercharging consumer spending. Could it also delay a BOE rate cut? We'll discuss. This is Bloomberg.
And
go yourself. Is that clear?
Even though I'm a licensed financial advisor, real estate broker, and becoming a stockbroker, this video is neither personalized financial advice nor real estate advice for you. It is not tax, legal, or otherwise personalized advice tailored to you. This video provides generalized perspective, information, and commentary. Any third-party content I show should not be deemed endorsed by me. This video is not and shall never be deemed reasonably sufficient information for the purpose of evaluating a security or investment decision. Any links or promoted products are either paid affiliations or products or services which we may benefit from. I personally operate and actively manage ETF and hold long positions in various securities, potentially including those mentioned in this video. However, I have no relationship to any issuers other than HouseHack, nor am I presently acting as a market maker. DJD! That poor thing has been straight down. Look at that. Oh well. Coffee time. Do you want to buy an overpriced, unreliable car that needs specialized parts and labor? Buy a Ferrari. Sounds like someone who works for Ford. You didn't get the announcer to do the disclaimer? Not that whole thing, man. That disclaimer is way too long. But I got some of these.
Evaluate your own suitability. This is not personalized financial advice. Don't sue me, bro. Subscribe to Meet Kevin. Go to meetkevin.com.
How's that? Don't leave like my dad with the milk. Bro, he's just getting the milk, man. Oh boy. All right. I gotta go. Somebody's like, what's your favorite one? Probably one of these.
Poopy doopy. Triple reamed.
All right.